welcome to Gen Exchange. This is a series unraveling the misnomers of angel investing, making it easier for anyone, anywhere to invest in startups. This series is presented by the Global Business Angels Network, also known as GBAN. The lovely folks in front of you are some of the members of the GBAN board. This is an international community of angel investor networks and a program of the Global Entrepreneurship Network, also known as GEN. I'll be helping move things along for the session today, and I'm also, just for background, the director of GBAN and the director of startup programs at GEN, which falls under the purview of that title. So just quickly, let me tell you just a little bit more about GBAN before we get started. Our members include some of the most active angel networks in the world, representing their country's early stage investor ecosystem. As a group, our goal is to increase access to private capital where it's needed most, amplify the angel voice on regulatory issues, facilitate cross-border investing, and remove policy barriers faced by investors. We're thrilled to share this conversation with you all. Today's discussion, building an active and sustainable business angel network. Our speakers will be Tommy Davis, Linda Smith, Peter Colley, and Israel Pons. All of them are respectively leaders in their ecosystem, helping build angel groups, helping lead this industry as a whole. Just as a note, Tommy is in Morocco with his son right now and his family for their birthday, so he's going to join us in the second part of this discussion. Just to kind of give you guys a sense of how this is going to work, I'm going to go through 3 different sections of this conversation. We're going to look at the baseline of success for angel groups, what has worked and what hasn't, and we're going to get just a little bit of a deeper dive into what some of these folks have seen in their respective parts of the world for building these angel groups and helping increase deal flow and expand the impact that angel groups can have on their ecosystem. And then finally, we'll look at technology. So without further ado, I want to give the panelists an opportunity to just do a very brief introduction of themselves. And then once they're done with that, I will kick off the first slide.
Polly, I'll go ahead and get started. This is Linda Smith. I am President Emeritus of Angel Capital Association, which represents over 14,000 accredited investors in North America. What you see behind me is beautiful Lake Tahoe. It spans the states of California and Nevada in a northern part of the United States. So looking forward to chatting with everyone.
Shall I go next? So I'm Peter Cowley. I'm President Emeritus of the European Business Angel Network. I'm also a long-term entrepreneur the last 40 years and a very active angel investor with over 70 investments, had quite a few exits and failures. And I joined the GBAN a couple of years ago. My background is nowhere near as exciting as Linda's, and it's advertising the books I've written.
Hello, everybody. It's me next. I'm Israel Pons. I'm a founder of Angel's Nest, an angel network that operates in Latin America, and also of an event called Pitch at the Beach that some of you have heard of. I also represent on the board of GBAN, the region of Latin America, with a lot of experience in the whole region of setting angel groups, having some great successes, some also very useful experiences to some of it hasn't worked and what has not worked. And right now I'm talking to you from Portugal, where we are doing our next Pitch at the Beach in a couple of days.
And I can attest to this is a fantastic event. If you are in the region, wherever they happen to be hosting this event, take your sandals and your shorts and head on over. You're going to meet. I met 35 founders in Mexico in March, and it was fantastic. Just so I can be respectful to Tommy, I just want to introduce him. He is the co-founder and president of the African Business Angels Network. I'll let him do an intro when he joins, but I just wanted to say that he will be with us a little bit later. All right. Question 1. Guys, what is the baseline for success? What should early stage investor groups hope to accomplish in their formative years? I use this. Go.
Shall we start with Linda? Shall we do the same order, Linda? You go first, I'll go, and then does that work? Yeah.
I'd be glad to get us launched off. I think the most important baseline for success is finding a group of individuals who are passionate about their local economy. Most angel groups really are made up of individuals who want to diversify, who want to support entrepreneurs, and they need to have both the passion as well as the time. It's not going to take a lot of individuals. Even a handful is often all you need to really start a successful investor group. It is important that they have time that they can set aside to find potential investments, to be able to do the due diligence that's associated with making a good investment, and then to stay with that company until it either has an exit, hopefully an acquisition, or maybe it doesn't succeed. But that would be the important baseline. The second point I'd like to make is I'm often asked, is it important to have government support to be a successful angel group? And my comment there would be, while it may be helpful, it certainly isn't essential and sometimes can be a little bit of a hindrance. Government support could be in the form of tax credits that encourage angel investments. It can be in the form of assistance to entrepreneurs, such as helping with their payroll and their other expenses, or it could be in the form of co-investing with an angel group, in which a government entity assists by providing some money along with the investor group in supporting young entrepreneurial innovation talent. It is helpful to have good laws or regulations in effect that support angel investing and protect private property, but certainly it isn't an essential baseline for success. Israel, over to you.
I'll let Peter go first. Do you want to go, Pete?
Yeah, happy to. Yeah. So thank you very much, Linda. I mean, yes, exactly right. People, as think of it as a startup. Think of it as investing in a startup, although it doesn't get investment necessarily. It's the people that will create it and will make sure that it will continue. And getting those together, that will put voluntary time in, etc. So that's the formative year, or the start of it. What I'm going to add to that is sustainability of the organization, and Linda touched on that to some extent with funding from government or co-investing, etc. But in the end, the group, whatever it is, whether it's a small group of people who knew each other already, or whether it's as large as some of the groups you hear about, which have got hundreds or even thousands of people, it's making sure it survives and continues for a length of time. And in order to do that, you either need some really keen, committed people to run the administrative side of it, or you need some sort of fee income from somewhere, or grant income, in order to run it through so you can employ some people. So these fees could come from the angels themselves, they could come from transaction fees for the entrepreneurs, which is used by many groups. So I would rather the money came from the angels. After all, the angels are the rich people. It could come from sponsorship, from law firms, from patent firms, from wealth managers, or it could come from grants from local government, etc. So I'm going to add sustainability to people and then pass over to Israel.
Thank you, Pete. I would like to take it a little bit earlier years, probably early months. I think it's a discipline to meet, first of all. Each individual that wants to become an angel investor, part of an angel network, you have to learn that you are going to give up some of the stuff that you do now to start doing angel investments, to be part of a group that normally will expect you to be in those meetings that they call you to. That also means that not only you have to participate, but also you have to be active with your checkbook, and that you also have to convince your family that you're going to be taking part into that. So really, one of my experiences has been that starting at on early stage with angel networks, it's all about how well you prepare yourself to be part of it. And then is how well you get on with others that are within that group. And then is how well and how quickly the local ecosystem is exciting enough for that angel network to start looking at some investment opportunities. I'm not going to go into sustainability because I think it has been touched. There are different areas how to fund sustainability. But I will say that the most important thing is to hit the ground running. right? So how quickly you make the first investment as a group rather than only by 2 or 3 individuals could help to generate the cohesiveness that some groups need to have on early stages. And how quickly you can leave without government money. Of course, it's always welcome. Of course, it's always going to help to bring others into the group. But we have found that sometimes at early stages in the formative years, you tend to lean quite heavily on the government grants to survive. And when that goes, it's very difficult to find sustainability. So my point is you have to hit the ground running. You're there to invest. The quicker you make an investment as a group, I think the quicker that you have to be there for a while.
Maybe building on what Israel just said, as well as looking across various continents, there tend to be 2 different business models for a successful early stage investor group. One is where they set up a fund, and each one of the angels commits an amount of money. In the United States, it's often in the $5,000 to $10,000 range. And that fund is then governed by maybe a handful of the angel investor group and makes decisions regarding which early stage companies they will invest in. The second model we see quite prevalent is the individual investor decision. In other words, you don't put your money, pool your money into a fund, but each angel individually decides when they have an entrepreneur pitch in front of them, decides whether or not they want to put a sum of money into that entrepreneurial effort. Again, in the United States, the amounts may be somewhere in the $10,000 to $25,000 range for an initial investment into an early stage, and then keeping some money aside for follow-on investments in that same company as they reach specific milestones or goals that the angel group has set for them. But I'd encourage everyone who's listening in to think about whether or not you want to set up a fund as your business mechanism for your angel group, or whether you'd prefer to maybe have individual investors make their decisions. Maybe 3 or 4 of them, 10 of them, maybe the entire group wants to invest in a particularly exciting, innovative entrepreneur. But those are the 2 models that I've tended to see. Peter, are there any others that you could make comments on?
No, I won't. I have could say something, but I think we should probably move on. So can we move on to Pauli to the next question, I think? Is that right? We've got just a few minutes. Pauli? Your microphone's off. So I'm just basing this on what was said in the chat to us. So.
Oh, no, we still have 4 minutes left of this section, unless you guys have, you're good on this section.
No, I can't really add much more to what Linda said. So, yeah, the ones that are sustainable, in my view, and I've been involved in probably about a dozen angel groups and set up 3, or helped set up 3, are the ones that somehow get an income stream which allows some administrative help to happen. Because although you can have completely voluntary run angel groups, they tend to be dependent so much on individuals. Unless you can recruit other individuals to put the time into it, they can fade away. But at the same time, actually, if you get an income stream from, as we've had in the UK, as political changes have gradually happened, you're relying on an income stream from a particular source, and that source dries up, they'll fail that way. So either income from angels themselves, by far the purest form, in my view, they're the people you should be taking the money from, not from the entrepreneurs, or, as is in many cases, a transaction fee of 5% or so, which then goes to pay the administrative costs.
All right, I'll move on to the next section.
Just to complement that very quickly, there are Linda mentioned about the creation of a fund or a fund style sort of investment. I just want to be clear to the audience that you can and Tommy will probably also agree with this, since we about a weekend ago we were talking about these points in front of a audience in Greece, that The whole objective is to get the investors investing, and having a consolidated decision or having a syndicate decision for the first two investments creates that group feel to it, right? So we are a team, we're going in together. And obviously in emerging markets, we even talk about a ticket size of $2,500 for this. You could call it fund, but it's not. It doesn't administer like a fund. It's basically just to make those first investments. What will happen afterwards is that obviously once you're in together, then you start monitoring what's the next step you're going to do, how you're going to do it together. But it's like anything. If you buy something, that you all have an ownership of, you look after it, but you also create that community effect. And I think the baseline for me is creating chemistry between the founder members of that angel group. Like they have to become really cohesive and really purposefully, just like Linda said, that is because you want to help your local economy, but also you want to be connected as a group in the long term.
Holly, maybe just to add one other point that I think Peter touched on. Really, again, there are sort of two models that we see looking across the globe in terms of how you manage your angel group. One is where they use volunteers, which are the angels themselves, who carve out some time, as Israel says, to keep the group meeting on a regular schedule, identify early stage companies to be looked at, and make sure all the due diligence and homework is done before an investment is made, and then manage that investment. The second option is to hire staff. And again, you have to have a revenue flow to be able to hire staff. As Peter mentioned, it might be when you have a fund, if you make an investment, you can use some of the proceeds from that fund's investments to be able to keep your staff going. There's no magical solution to either one of those two options. I've seen angel groups in North America that work entirely with volunteers. Sometimes we recruit interns from college who want to get to know more about early stage investing, and those that have very professional staffs that have been with them for a long time. So both are options, and it really depends on the resources that you have available in your local ecosystem.
And I think this is a good segue into the next question. So what has worked and what hasn't? I want this to be an opportunity to talk about failures and the things that you guys have run into that have actually, that takes experience to actually know is something to look out for.
Shall I just start here? So operating in different economies, that varies dramatically, and I can really only speak in terms of Europe, where it's considerably more advanced, not as far as the States, as we'll hear from Linda, but considerably more than, say, Africa, where Tommy will speak upon later. So first of all, you need deal flow. So not having deal flow means there's no deals to invest in, and therefore no successes or failures for that matter. And having the deal flow doesn't have to be in the locality, and less so as more and more cross-border investing. By cross-border, I don't necessarily just mean between countries. I could just mean even within a country. I mean, in the UK, we have a big issue with the fact that the southeast of England has huge amounts of activity, and the west of England and the north of England doesn't. And I'm sure that the situation is very similar in the States, and certainly even more so in South America. So having the right deal flow is there. And if the deal flow is not there, of course, what is the angel group for? It could be it could be a social group, of course, and may well be a social group. It could be an educational group, but it will need the deal flow. The second point I just want to say is who leads the deals. By lead, I mean when you invest in an organization, it's a meeting of not necessarily of minds, but it's a deal that needs to be done. So the entrepreneur will come up with something they're offering, which is of course the skills of the people and the plan, and the angels will come up with a combination of money and hopefully help. A deal needs doing on that basis. Who's going to lead this deal? Is it going to be the entrepreneur that sets the price and everything, or is it going to be one of the angels? And having the right, certainly in the UK, it's, apart from crowdfunding, it's more normal for the angels to lead the deal, or to have somebody else, another angel group, or possibly a early stage VC. So the more activity where it doesn't really matter, although obviously the deal has to be done such that the right price and the right terms occur. So because in the end, it's like buying anything, you're buying shares at a certain price. You want to make sure that price works for both parties. But getting the activity going, getting the skills there, if in your economy it's more often done with the angel, which may be less so and is less over the years, then having those skill sets is important there. They don't need to have them on day one, but they must build that up to be sustainable as an organization. I'll hand over there, and I'll probably say something again in a minute. Israel, say you next.
I'd like to touch a little bit here on to how you operate the group. I think something that can be quite difficult to do. You start an angel group and then you forget that you actually need to have certain documents, and I will say, even your own Bible as angels. So not being able to agree on what the operation of the angel group is going to be like, the decision making, the who's going to be the president, or who's going to be the chair, or who's going to be, the silly ego trips that normally happen within groups and associations that we know that happen. So having a code of conduct, having corporate governance as an angel group, having decision making as an angel group, all of these procedures that have to be in place are very, very important, because the more you have them in place from day one, people are going to respect the way the angel group is going to be taking the decisions in the future, whether they turn themselves into an angel group that creates another line of revenue by certifying and giving courses to future angel investors, or whether they will want to create a sidecar fund or a angel VC fund, or whatever decisions they're going to take. Normally, I find that if there isn't a complete structure at the beginning and the procedures and processes to be in place, and for all members to agree on how they're going to be taking future decisions for the group, that can be quite catastrophic. Obviously, in different economies and cultures, that's why it matters. In mature markets like Europe and the US, is quite simple to create an angel group, because you have this information easily accessible. In emerging economies, you sort of start reinventing the wheel as you go along, and that's why the work of GBAN is very important, because we have some of these statutory procedures that can be easily absorbed by new angel groups and their creation, and that can help eliminate some of these costly mistakes that could happen. And nothing worse can happen than creating an angel group, and then 2 years later it died, and 4 or 5 of the angels invested in some deals, and now they are left on their own to look after their own deals and see what happens. So with that, I'll pass over to Linda.
Israel, you raised some very important points, particularly about, the worst thing in terms of starting a group. There's a lot of enthusiasm, and then all of a sudden it peters out. I want to share with everyone that there are a lot of resources. You don't have to start from scratch in terms of how to set up an angel group and what the guiding principles should be. The organization I'm with, and I know Pat Guhin, our executive director, is on this call, has something called Angel Group in a Box, and it's a wonderful set of instructions for how do you structure the governance of your angel group. And important within that is what is called the code of conduct, or the ethical rules. For example, we very much believe it's important not to charge entrepreneurs to pitch in front of you, or some kind of a fee to be able to get an investment from an angel group, but we do charge our angel group members a fee to sustain us. And that fee can be anywhere from, in North America again, maybe $1,000 per person, up to perhaps $2,500 to $3,000 per person per year, That doesn't count the money you're investing. It's just your fee to your angel group to keep the group going, to have a staff, to be able to have meetings, provide a facility, all of those logistical issues. So I want to encourage everyone to look at Angel Capital Association, our resources, and look at maybe establishing an angel group in a box as a way to begin to get you started. One final thing, I saw a question about angel funds versus VC funds. Fundamental difference is angel funds, we're investing our own money. Venture capitalists get money from other people and then make the investments for them. We always make that distinction, particularly to policymakers, because it's important for policymakers, government officials, wherever you're located, to know that these angels are using their own personal dollars or own personal resources, as well as mentoring and assistance to entrepreneurs. So it's more than just investments, it's making sure that we work with innovative people to be able to diversify the economy using our own resources, not somebody else's. I see Tommy's joined us. Welcome.
Yep. Thank you. I was in earlier, but then I ran out of battery power. So I had to rush back to the hotel, which is where I am now, to be able to connect.
Tommy,
I'm glad to be here. Yeah, go ahead.
Sorry, I just wanted to alley-oop you in.
Mm-hmm.
You know, this is the second section, but we talked about the baseline for success, and some of the conversations kind of started looking at what has worked in different economies. And, you know, I think we missed a bit of your perspective in that part. And so, you know, I just wanted to say, if you want to chime in and talk a little bit about your experience, you know, what has worked and what hasn't with some of the groups that you helped form, that might be helpful in getting into this discussion.
Yeah, I think in terms of sustainability of networks and what we've seen work, the first thing I say to people when they want to start a network is, no disrespect, it takes a minimum of 5. And the reason I say 5 is because in our experience, we found that it takes 3 people to drive an angel network. I'm not just talking about the funding of the network, which Linda had talked a bit about the last few minutes of her speech, but in terms of individuals that actually drive, I don't know where that numbers come from or why it works that way, but we've built upwards of 50 networks so far, and what we've found in each instance is the ones that have lasted 5 years or more, and like the Lagos Angel Network, which is over a decade old now, is we found that it takes, so what I now call them primary drivers. You will find it's not always the president or the head of it. That's not what I'm talking about here, but individuals who actually have a passion for developing the community of angels are critical to the development of any angel network. And that's what I found consistently as a thread around the networks that we found. What we're also Hello, can you hear me back?
Yes.
Now we can.
Yeah, okay, because I think I lost you there for a second. What we are also starting to see, which is very, very encouraging to me on the continent, is we're starting to see some of the entrepreneurs that we invested in a decade or so ago actually becoming angels themselves or writing checks. And that to me is very, very heartwarming. I think I'll shut up and let others.
Yeah, can I just add a quick thing? We talked about the formative years before, but
unless there's something I really want. Can you hear me?
You're breaking up quite a bit at the moment, Tommy, as if your Wi-Fi is not very strong. Can I just add, I'll just add something to this. After the formative years, it's really important. I don't know, was it David Rose that said angels are in the exit business, they're not in the philanthropy business? I can't remember who said that, maybe Linda will remember that. So you do need some exits at some point, and they will take a long time to appear. They could take as much as 5 years or 6 years before they start to happen. So it's got to be a journey. Otherwise, people will, particularly in a new area where a new group's being set up, people will start to use both patience and faith that the investments they're making have got any hope of success. So longer term, good deal flow, helping the entrepreneurs in whatever way you can, and leading them or helping them get to exit is critically important. Can you imagine, for instance, an angel group that had, I don't know one, but had 10 years of investing without an exit, just failures? That would be very disheartening.
Maybe while we're waiting for Israel to join us, in terms of answering the question, how do groups operate in different economies? I think it is helpful to be able to assess the risk profile of the community that you are located in. Some cultures see failure as a cultural stigma, both on the individual and maybe even as far as the family, and therefore might be much more hesitant to take on these risky investments into angel funds. So gauging the risk profile of your colleagues and the extent to which they're willing to take on this very exciting, but certainly a risky venture area of young startups is very important. Again, I can also not emphasize enough that in addition to money, the critical thing that angel groups do, and again, I think this distinguishes us from venture capitalists, is that we put a very significant amount of time into mentoring, coaching, and counseling entrepreneurs, even those that we do not invest in financially. In other words, helping them to realize what is their pitch good? Do they have a PowerPoint deck that really is conferring the right information to potential investors? Have they structured their deal in a way in which angels are willing to make an investment? Is it stock? Is it perhaps a convertible note? Is it a safe? What is the structure? How do they value their company? Because for angels, if the valuation is way too high, then that means whatever stock we buy is going to be very minuscule in terms of its value, or have they undervalued what is their potential as a young company? So helping them work through all of those fundamental questions is a key part of what angel groups do, in addition to the actual putting money into a new deal. Israel, we jumped over you, but I don't know if you want to come back in.
Being hosted by your local partner here in Portugal, and I had to move office. I didn't know I was in somebody else's office, so I do apologize, everybody. But it's part of being in the entrepreneurial ecosystem, right? So everybody is a host. I was, and I also managed to listen to Tommy, which I think he's back on full signal now. I wanted to mention that part of the conversations of having this networking with GBAN, it allows the audience and also ourselves and other angel networks to really integrate the best and also some of the bad experiences we have had within the regions on how to do it. The US has led a lot of the angel investment and capital investment in the world for a number of years, and probably will continue to do so, given the revolutionary thoughts and economy that they have. But it doesn't necessarily mean that what works in Silicon Valley, in Austin, will work in Miami, or will never work in Europe. Like we know the SAFE failed completely in Europe. Convertible notes not necessarily Peter will be able to tell me if I'm wrong or not. That not necessarily the best friend in the UK, although the UK also had great incentive schemes through the government. I will say probably the top in the world incentive schemes on the fiscal side, tax side for early stage investors, and then there is Tommy and I from other regions that we have to, tread carefully with what comes out of this leadership regions. The SAFE had been adopted in Latin America greatly by the startups and not so by the angel investors.
By the angels. Exactly.
I could say that we as angels were completely ignorant on the SAFE and the startups that we had from Latin America that were going on to these great entrepreneurial, tourist, sponsored, government-sponsored delegations to the
and all the angels that participate in that do that free of charge also. I'm quite impressed to see the amount of time our North American colleagues have donated to entrepreneurs. We'll see what we can do to get our people on this side to sign up. But there's something I wanted to point out also about angel investors, especially on the continent, and given where we started from, and that is there's a requirement for longevity. What do I mean by that? The way we pitch the creation of angel networks is these are the entrepreneurs building the future of your city or building the future of your country. So in fact, we are starting to move aggressively with the AU to see angel investing as an economic development tool for that reason, because a lot of the angel dedication requires it to be location specific. When we've gone into cross-border and we're looking at a lot of international investments now, and I'm quite sure we can talk about that, but the prime purpose, the prime raison d'etre at the beginning was for angels is giving back to a city that had given them something or that had nurtured them in a way. And mentoring and advisory and those kind of things were the contributions, in addition to the cash being the last part of the investment. But it's actually spending that time, that expertise that you've acquired in a particular geography and giving that as a benefit to the entrepreneurs who are operating within that environment. That was a prime purpose of Angel for us also. And I just thought I'd add that dimension to the conversation. I trust that helps.
And thank you. And everyone, I just wanted to give us time for this last question. I know from the groups that I work with that technology and various social media platforms and different tools have been kind of changing the way that groups operate, especially in this virtual post or current pandemic world. So I just wanted to give you guys all to talk about the role that technology is playing in the work that you're doing, and also give you a chance to talk about the future of this industry as a whole.
Well, I think I would like to take that from different angles, if I may. The first is actually an industry itself, and I think Israel was talking about fintechs earlier, and we're starting to see the tech-driven industries sort of take center stage with AI maturing and quite a number of other technologies coming center. So if you look at fintech, health tech, edutech, sustainable agri-tech, and of course, power, technology is driving a lot in those industries. So that's one aspect of it. But I think what you're alluding to is how does technology help the angel investment case itself and how we as angels work? Well, the good news and the bad news is the one we're on is Zoom. Because of Zoom, we can now have meetings we never could before with our entrepreneurs. And that has altered significantly the level of interaction I know I personally have with my portfolio companies, where as before I'd wait for an email. Now between WhatsApp and Zoom, it's almost like we're talking every other day, or on a very, very consistent basis. So I expect technology to continue to enhance communications as one.
Did we lose him?
He's back. My apologies for the instability. The third and final part of technology is the operational support part. And my mentor, David Rose, was sort of first person to put a shot across the bow with Gust. But we're seeing quite a number of other operational platforms supporting angel work across the globe, and I'm quite sure my colleagues will have more to say on that, but I trust that helps. Thanks.
Maybe just to pitch in here, so as Tommy indicated, at least 3 different ways in which trends in technology are really impacting angel investing entrepreneurs. One, of course, is the ability to conduct meetings.
Hello.
One, of course, is to be able to conduct meetings much broader in terms of your geographic scope, so that you can use Zoom or join meeting or whatever for your angel gatherings. The second is to allow pitches by entrepreneurs who are not in your local ecosystem. So you can bring them in virtually and have them make a pitch to your group. Some of us still like to press the flesh and actually meet the entrepreneur in person, but we're seeing much more of this pitching electronically as a way to consider deal flow. And finally, the third would be syndications. Again, we're getting the opportunity to be able to share a lot more information through current technology from other angel groups or other angel networks, so that we can see what are they investing in, where's there a chance maybe to co-invest along with them through the syndication technology. And as Tommy said, there are also platforms now that allow you to invest. A couple of that I look at quite regularly are Angel List, which is based in California, but it's really global in scope, and Our Crowd, which is out of Israel. And it does wonderful due diligence, and all you need to do is look at the deals that they've posted. You can raise questions and then make a decision to invest in some things that they have really vetted very thoroughly. So that's an opportunity I wouldn't have had 10, 15 years ago when I started my angel investing. What else, guys?
Yeah, thanks, Linda. Yeah, it depends to some extent. Totally agree with what you say, Linda, but it depends to what extent what sort of angel you are. And personally, I'm an angel who likes to get involved if I can at all. And of course, going through crowdfunding platforms, say Our Crowd or the various other ones around, means you have much less contact. You can reach out, of course, but you will have less access. You'll have less access during the due diligence process and after the event. So if you're going to use it as an asset class, you've then got to decide whether you want to go through a platform or you want to just put it into a fund of some sort, which of course could be a fund within an angel group, as we said earlier on, or could be another fund. You know, in the UK, we have tax advantaged funds. And if you've got a big enough check, like usually $250,000, $500,000, you can put it into some VC will handle it for you. I like to be involved, and therefore I really like to be on the shareholder register, the cap table, in which case I'm very lucky here living in the UK, and particularly in Cambridge, that I've got access to good deal flow. Many, many people don't around the world. In terms of tech, I don't think I can add very much more to what Tommy and Linda have said. It's made a huge difference having remote ability to do due diligence and to help people. Cross-border investing is becoming more and more important. In Europe, of course, there are entrepreneurs in every single country. The capital is mainly concentrated around France, Germany, United Kingdom, to some extent Italy, Spain, etc. Getting the money to go across the borders is important, but generally because when we're investing in entrepreneurs as angels, whether it's via a group or direct, we're investing in a partnership which needs trust. It's difficult to do that in another country. That should be, whatever the technology involved, the trust bond, in my view, needs to be done through an angel in the local country, which you then trust to help you with the due diligence and the help with the journey that the entrepreneurs are on. Maybe you're the investor, director, representative, etc. So just to finally, what will the future be look like? I hope more and more angel investing throughout the world. I hope more and more cross-border investing, and that definitely needs technology and globalization. Israel?
I was just checking my technology because I got a message from the start of the pitch. Yes, I think definitely on what technology means is that the returns for angel investors can be, I will say, more reachable now. And hopefully that will mean that the percentages of projects that fail in our portfolio are lesser than before, given that one of the biggest challenges on early stage investments traditionally has been the potential to scale. And the potential to scale mostly has always been dependent on two factors. One of them has been the amount of capital you can invest into the project or that project can attract to grow. And the other one is the technology that can implement in order to scale the business. Technology is being more accessible. Technology is being an integral part of most early stage businesses right now, which means they can scale. They can not only scale nationally, they can scale internationally. That should mean that the projects that we invest in should have a higher percentage of obtaining a great exit for us. So the role of technology can actually directly impact on the returns that we're going to get on our portfolio. What that also means is that, just like Peter said, is you have the opportunity to co-invest with others or invite others to co-invest into the projects that are of your locality. Having this cross-border angel investment, I remember about 15 years ago, we only started talking a little bit about it, and it was almost a no-go. Nobody was doing any cross-border. Never mind doing cross-states. No one was co-investing with another angel from another angel network from another state, right? Everybody was staying about 2 hours from one another. Now we're doing co-investment with Africa, co-investing with Europe, co-investing with the US and Canada. So technology is really giving the angels a far greater opportunity of getting good returns. So there are two things that I like to move with technology with. I hope our wings now have become powerful with technology. That means that we can impact in more projects, we can impact doing more things online. But like Linda said, so we can have a greater reach, but also very much agree with Peter and Tommy that this is about people and being in touch with people and being involved as well. Myself, I love getting involved with entrepreneurs and investors on a one-to-one basis. That's why I do Pitch at the Beach. That's why I grab people and I force them to go to the beach with me, to do networking, to connect, to have a few drinks, to actually see great technology, great startups, great entrepreneurs, and great investors getting together. You know, how does that happen? Then people come from all over the world, and will you eventually do a cross-border angel investment? Yes, it does happen. That's right. But you know, the connection of us as human beings. Okay, pre-COVID, we were doing it. During COVID, we did great deals. Post-COVID, I think we should have the mixture of both. Great deals online, virtually, going into our own metaverse, but also getting in touch with each other as human beings at the beach, and why not?
Thanks, guys. We do have one more question, but before we get to that, I don't think we will, just for the sake of time. So to kick off and end this discussion, I just want to give each of you a chance to give some parting advice, what would you tell someone who is aspiring to build their own angel group, or tell someone who is dealing with some of the struggles that you talked about? What advice would you give them?
Quite simply, go for it. Put the effort in, do as much research as you can. Listen to Linda, she's got some great resources on the ACA. We put a bit onto GBAN website that Paoli's done. Just go for it. Just get together some people, as we said, minimum of 5, Tommy says, whatever, 5, 10, just go for it. You know, be entrepreneurial about it. It was said earlier on by Israel. That's my view.
I would echo that. Carve out some time, find 4 or 5 friends who are willing to take some risk and to support the local ecosystem and invest and work with entrepreneurs. And then look at all of the resources that are available through Angel Capital Association, EBAN, Israel's groups, AU, all of them. I know Tommy has started a number of angel groups, so he's got a lot of history and experience under his belt. And all of us, of course, through GBAN are available to assist and consult. And that's what's great about this organization, because it puts you in touch with angel networks across the globe. And we can find a group that fits your local environment pretty much amongst the 170 countries that are involved in the GBAN network. Is it 170, Paulie, or is there more?
We have representation in 79 countries now.
Right.
But Jen as a whole. Yeah.
Now, from where I sit, if you're starting an angel network in 2022, you're spoiled for choice, as you've just heard from Linda and from Peter and Israel. The amount of content and wealth of information, experience, and support available to you now has never been there before. It's really, really amazing. So what I would say is reach out to any of the organizations you've just heard about, the one that's closest to you. Do the research and do the homework, but most importantly, as Peter said, just get on with it, okay? The enjoyment is actually in the doing, but remember this also, it's a marathon, it's not a sprint, okay? So it's not about your first deal or your second deal, okay? It's about a portfolio that you and your colleagues build over time, okay? And it's about the impact that portfolio has on the societies in which they operate. That's why you're doing this, okay? And that's where you need to keep front and center. But I'm with Linda and Peter, just get on with it. Israel.
I will say, just to add very quickly to that, one of the things that really helped me when I started as an angel investor in the UK and then coming to Latin America and creating an angel network was to find my own sort of angel to help me do it, right? Somebody with experience, somebody who's been there, has the scars, can be a little bit of a mentor, a coach, and help you, and also give you that, believe it or not, a little bit of credibility that you're going to need by convincing others, because bringing mature in experience, as in that, not just on age, but also with experience, angels from around the world, will help you to convince your local authorities, your governments, to support the creation of an angel network, the impact. So you need hard facts. There's a lot of this work that Tommy said has been done. So you don't need to really go Dr. Googling absolutely everything. You just need to make sure that you go ahead and do it. You just have the guts to do it. And this is going to be your new lifestyle, right? Angel investment is not a hobby. Angel investment is a lifestyle, just like entrepreneur is a lifestyle. And it's really, really enjoyable, long hours, nerve-wracking, hand trembling when you sign the check to invest, but it's really, really enjoyable. So, surround yourself with people with experience to do it, and approach GBAN. They can contact you with anybody around the world that is close to you that can help you do it.
Thank you. That's a good place to end this conversation. For anyone who has any additional questions and wants to access some of the resources that we discussed here, or some of the individuals or some of the groups in GBAN, just contact me. I'm an open book. I'm someone who tries to connect everyone to the things that they're looking for, or at least help them figure out what they're actually looking for in the first place. And in this case, there's a lot of people who are trying to throw their hat in the ring. So, if you do, we'll do our best to support you. As a closing note, I just want to say applications for the Entrepreneurship World Cup are open. So if you do have some startups in your portfolio, some founders, or you run an accelerator, wherever you come from on this call, it's a great opportunity to get some undiluted cash for for one of your portfolio companies, or for your company yourself if you're an entrepreneur here on the call. Really great accelerator style program, and you'll be representing your country. And hopefully, if you make it to the finals, you'll fly out with us to Melbourne next year at the GEC and pitch on stage, and get a handful of the $1 million that we're giving out. So it's really fun. It was great in Saudi. So I will end the call there. Again, just reach out if you have any additional questions or things that you want to get connected to in regards to this call. And I hope everyone has a beautiful day. Thank you, guys.
Thank you.
Thanks, everybody.